We have Kranthi Bathini joining us this morning with more on what to expect in the day ahead, if not the weeks ahead. Kranthi, good morning and thank you so much for your time. We are seeing a sea of red on markets this morning. In fact, when we were checking the Asian markets this morning, it was expected to be a gap down, but the pain seems to be much deeper than that. What do you make of the market mood this morning?
Uh, Kartik, if you observe the market texture, the earlier when crude got cooled off around to the $95, around below $100 per barrel, the market was rallied till the range of 24,500.
Yeah.
And from there, there are stiff resistance levels for the market. And from there onwards, market came below the range of 24,000. That's where it took the support. Again, as the crude is rallying, this time the crude last previous high was 119.50 to be very precise. That was the high. Now the Brent crude is trending above $122 per barrel. As long as crude is at the elevated level, we are going to witness the selling pressure on Indian markets, because we have been discussing the the negative outcomes of rise in the crude oil prices. That's again playing on the cards at this point of time. That's where market again drifted below 24,000 level of Nifty. That's the key concern at this point of time. As long as the crude oil is the pendulum is shifting between these high and low, Indian markets will swing according to the movement of crude oil in the medium to short term. We need to have a decisive crude oil closing below around 80 to $85. That's where we'll get the comfort. Till the time the market texture is buy and dip, sell and rally kind of a market. As you also rightly mentioned, we are going through the earning season. Thanks. There are no negative surprises in the earning season. The impact of geopolitical issues and crude oil uh, on the Q4 results are concerned, they are slightly minuscule. But going ahead, definitely these rise in crude oil prices, they are going to impact the earnings and take off the margins going ahead. So crude is the important thing. That's where acting today.
All right, of course, crude is the biggest story this morning, with crude trading now at elevated levels beyond 120, in fact at $122 a barrel. But Kranthi, another interesting development over the last couple of days has been the fact that UAE has decided to exit, starting tomorrow, the 1st of May, has decided to exit OPEC and OPEC Plus. Now, obviously, the argument is that UAE will be able to pump more oil and have its own sort of control on how much oil it wants to supply to the global market. That is likely to ease the pressure on crude oil, isn't it? And how does that particularly impact Indian crude oil flows and, of course, the mood on the market?
Karthik, one thing is we also need to look at the how the changing world order is. It's a big news and big blow to the OPEC countries. One of the key country in the OPEC nations, the UAE is exiting OPEC nation, means it is completely destabilizing the OPEC association is concerned. And coming back to UAE, they have their own gains. They are free to the production, how much production they want to pump in, and how much the oil they want to sell. They need not have to follow the rules of the association, associated countries are concerned. So by and large, UAE can gain around $140 billion for because of exiting the OPEC, and these are the approximate figures. Oh, that's where the UAE is exited OPEC is concerned. But it's a major decision, and seriously, we can see the change of world order at this point of time. That's where we are going through these kind of phases at this point of time.
Of course. Let's come now to the earnings season that you and I briefly touched upon, Kranthi, and let's begin with the two big Adani Q4 earnings expected today, Adani Enterprises and Adani Ports. But ahead of those quarterly earning results, both Adani Ports and Adani Enterprises are trading in deep shades of red. In fact, Adani Ports is down almost 2% in trade this morning. Adani Enterprises down about 1.5% or so. What are the key concerns that investors should be wary of as they listen to the commentary coming in?
One thing, I think these stocks are quite resilient and rallied also in the recent past. And today happened to be the market is in a down day, we can see some kind of a sea of red in the market, and these stocks are tend to be in the downtrend negative territory today. As per the Adani Enterprises results are concerned, the last quarter results have been a standout quarter for Adani Enterprises. The incubating businesses like the data centers and the main key revenue for Adani Enterprises do comes from substantial amount of revenue comes from coal trading. The coal trading has been quite firm for the company, and the coal prices are also inching up higher, and there is a strong demand ahead of the summer due to the power demand is growing up. So I expect a positive results from Adani Enterprises for the Q4 is concerned, but we need to see how much extent the geopolitical issues have weighed on this company's earnings in the medium to short term. But by and large, Adani Enterprises is a domestic driven story. The airports theme, the reality theme, all these businesses, incubated businesses are embedded in Adani Enterprises. So we can expect a positive quarter from Adani Enterprises, Kartik.
What about Adani Ports? Because that business is likely to be impacted with shipping costs and overall the volume of shipping also a little constrained. So what do you make of Adani Ports? I'm sure Q4 would not have reflected a lot of that movement, but going into Q1 of this financial year, is Adani Ports likely to continue to stay under pressure?
These businesses are very, we need to pursue as a long-term businesses, Kartik. These are typically not the businesses for we focus on quarter to quarter,
Okay.
but long-term, Adani Ports is the largest port operator in India. And given the kind of the global bilateral trade that is expected to go up, because India has been doing the trade deals with many of the countries. So recently, the trade deal with New Zealand is going to come up. So these trade deals make these ports busy in the coming quarters. That's where these companies these businesses are going to take the advantage going forward.
Fair enough.
So in the medium to short term, definitely, as you rightly mentioned, some kind of impact would be there. As things eases, these businesses are going to be thrive on a medium to longer term basis.
All right. And any caution likely to be reflected in the guidance for FY27 by HUL, of course, the FMCG giant, which is also expected to announce results today. What do you make, given the overall environment, inflationary sentiment all around? Is that something which is likely to impact FMCG stocks and particularly HUL? Is that something you're expecting from guidance for this financial year?
We have witnessed a resilience with respect to HUL is concerned, Kartik. So, how the rise in input cost, and also if the crude is going to be at an elevated level, the inflation it can be the key concern for HUL in the medium to short term. So these are the measures we need to see. Crude is a direct impact on the HUL's margins. So definitely one need to watch for the guidance from HUL is concerned. But one thing, Kartik, last couple of years, the HUL market has been somewhere it's in a consolidation. Majority of their products are challenged by the regional players and organic players are concerned. There is a key concern from HUL margins and the demand going ahead.
Of course, those are going to be the key concerns. Let's leave it at that. Kranthi, Bathini, thank you so much. As always, pleasure having you here with us on News9.
Thank you, Kartik. Always pleasure. Thank you.